There was a trader named Daniel. Not the kind you see on social media, posing beside rented cars or screenshots of perfect trades. Daniel had been in the markets long enough to know that most of that was noise. 30 years, 3 decades of charts, losses, wins, sleepless nights, and the quiet kind of growth no one applauds. But here's the strange part. After all those years, Daniel still felt like something was missing. He had strategies, he had systems, he had indicators layered so heavily on his charts that price itself almost disappeared. And yet, every now and then, he would do something irrational. He would cut a winning trade too early. He would hold on to a losing one too long. He would hesitate when he should act, and act when he should hesitate. It didn't make sense. Until one day he came across a book, The Best Losers Win by Tom Hougaard. And that's where everything began to change. The first realization. It was never about strategy. Daniel used to believe that success in trading was about finding the perfect system. He had tried them all: breakouts, mean reversion, Fibonacci, RSI divergences, moving average crossovers. Each system worked sometimes and failed often. The inconsistency drove him mad. But the book challenged a dangerous belief. There is no perfect strategy, only imperfect humans executing them. That hit harder than any losing trade. Daniel began to notice something uncomfortable. Whenever he lost, he blamed the market. Whenever he won, he praised his system. But the truth? His emotions were quietly controlling everything. Fear whispered when he should hold. Greed shouted when he should exit. Ego stepped in when he should admit he was wrong. And suddenly, Daniel realized he wasn't trading the market. He was trading himself. The second realization: losing is not the problem. Daniel hated losing. Every trader does, but he feared it more than most. A losing trade felt like failure, like a personal attack on his intelligence, his experience, his identity. So he avoided it. He moved stop losses, he held on to bad trades hoping they would come back, he doubled down to recover losses quickly. And ironically, that's what made him lose even more. Then came a line from the book that changed everything. The best traders are not the best winners, they are the best losers. At first, Daniel rejected it. How could losing be a skill? But as he reflected on his career, patterns began to emerge. His biggest losses didn't come from bad trades, they came from bad reactions to bad trades. A small loss ignored became a disaster. A controlled exit avoided turned into regret. And that's when he understood. Losing is inevitable, but uncontrolled losing is optional. From that moment, Daniel made a decision. He would learn how to lose properly. The third realization. Discipline is emotional, not logical. Daniel thought he was disciplined. After all, he had rules: entry rules, exit rules, risk management rules. But rules are easy to write. They are hard to follow, especially when money's on the line. He noticed something disturbing. When a trade moved against him, his mind started negotiating. Maybe I'll give it a bit more room. It's just temporary. I'll close it later. This wasn't logic. This was emotion disguised as logic. And that's what Tom Hougaard emphasized. Discipline is not about knowing what to do. It's about doing it when it feels uncomfortable. So Daniel started practicing something new. Not a new strategy, not a new indicator, but a new behavior. He began closing losing trades exactly where he planned. No hesitation, no negotiation. At first, it felt painful, almost unnatural. But over time, something strange happened. His losses became smaller. His confidence grew, and for the first time, he felt in control. The fourth realization: comfort is the enemy. Daniel loved being right. Every trader does. There's a certain satisfaction in predicting the market correctly. But that desire came at a cost, because when he was wrong, he resisted accepting it. Why? Because being wrong was uncomfortable, and humans are wired to avoid discomfort. But here's the twist. Everything that makes a trader successful is uncomfortable. Cutting losses? Uncomfortable. Letting winners run? Uncomfortable. Taking a trade with uncertainty? Uncomfortable. Waiting patiently? Extremely uncomfortable. Daniel realized that his natural instincts were working against him. His brain was designed for survival, not trading. So he flipped his mindset. Instead of avoiding discomfort, he started seeking it. If a decision felt easy, he questioned it. If a decision felt hard but logical, he leaned into it. And slowly, he began to rewire himself. The fifth realization: confidence comes from action, not outcomes. Daniel used to measure his confidence based on results. A winning streak, he felt invincible. A losing streak, he doubted everything. It was a roller coaster. But the book introduced a powerful shift. Confidence should come from execution, not outcomes, because outcomes are unpredictable, but execution is within your control. So Daniel created a new metric for success: not profit, not win rate, but consistency of behavior. Did he follow his rules? Did he manage risk properly? Did he act without hesitation? If yes, it was a good day, even if he lost money. This changed everything, because now losses no longer destroyed his confidence. They became part of the process, and wins no longer inflated his ego. They became a byproduct of discipline. The sixth realization: the market rewards the opposite of human nature. Daniel began observing his instincts more closely. Whenever the market dropped sharply, he felt fear. He wanted to sell, but often that was near the bottom. Whenever the market surged, he felt excitement. He wanted to buy, but often that was near the top. It was almost as if the market was designed to exploit human emotions. And in many ways, it is, because the market is driven by people, and people are emotional. So Daniel adopted a counterintuitive principle: if it feels obvious, it's probably wrong. He didn't blindly go against the market, but he became skeptical of his own emotional reactions. He paused, he analyzed, he separated feeling from fact, and over time, he stopped being reactive. He became deliberate. The seventh realization: size matters more than you think. Earlier in his career, Daniel focused on entries, perfect timing, perfect price, but he ignored something critical: position size. When he traded too big, emotions took over. Every tick felt amplified, every loss felt unbearable, and that led to poor decisions. But when he reduced his size, something changed. He could think clearly. He could follow his plan. He could accept losses without panic. That's when he understood: the key to emotional control is not willpower, it's proper risk. So he adjusted. He sized his trades in a way that allowed him to stay calm, because a calm trader is a rational trader, and a rational trader is a profitable one. The eighth realization: mastery takes time and pain. Daniel wanted results fast, but trading doesn't reward impatience. It punishes it. Every mistake he made became a lesson. Every loss became feedback, but only if he was willing to learn. And that's what separated him from most traders. Not intelligence, not strategy, but persistence. He didn't quit when it got hard. He didn't chase shortcuts. He embraced the process, because he finally understood trading mastery is not built on wins. It's built on lessons from losses. Years passed, but something fundamental had changed in Daniel. He was no longer chasing the market. He was no longer controlled by fear or greed. He was calm, focused, deliberate. Losses no longer shook him. Wins no longer defined him. He had become what the book described: a good loser. And ironically, that made him a consistent winner. Most people enter trading thinking it's about making money, but it's not. It's about mastering yourself. The charts don't lie, but your mind does. It tells you to hold when you should exit, to exit when you should hold, to hesitate when you should act, and act when you should wait. If you can control that, you can control your trading. And if there's one lesson Daniel would leave you with, it's this: you don't need to win more trades to become profitable. You need to lose better.